Let's take kind of each segment of the market or each market participant independently. What does this mean for small business owners or individual investors or consumers? Is there kind of a full-on recession? How bad is it? When does it happen? How are you thinking about what the impact of this situation will be on the average American or those small business owners?
Well, yeah, it's going to be a huge recession. I think it'll be a bigger recession, a deeper recession than anything we've experienced in our lifetimes. And, because a bust is proportionate to the boom. And this has really been an unprecedented boom created by the Fed, created by artificially low interest rates and quantitative easing. And so this could be one hell of a hangover. That's what's going to happen. And, but different people are going to be affected differently. The definition of a recession is when your neighbor is out of work, and it's a depression when you're out of work, right? So, not everybody's going to lose their job. But I think everybody's wages are going to be reduced in real terms. So even if you don't lose your job, I think that the money that you earn is not going to go as far when you go to buy stuff, because I think unlike previous recessions, this one is going to be inflationary. You're going to have recession and inflation happening at the same time. And that's what's going to make this recession so much more painful, because even if you don't lose your job, it's going to hurt. And I think most investors are going to lose money. I think most investors over the last decade or two have been channeled into the wrong assets by the artificially low interest rates. So a lot of people own very high multiple companies, growth companies, and in fact, companies in many cases that don't even have any earnings at all. Right? They were just speculating on earnings in the future, but people were willing to do that when the cost of money was basically zero. But I think as the dynamics change, a lot of people are going to realize that they're holding the wrong assets, and they're going to get repriced and marked down. So there's going to be big losses for most investors that have the FANG stocks or a lot of these stocks that did really well when the Fed was blowing up the bubble, but they're going to do horribly when it bursts. And then, the same thing for, your favorite cryptocurrencies. I mean, cryptocurrencies also got caught up into the speculative mania. And, the air is going to come out of that bubble too. So a lot of people that had a lot of money, or at least they thought they had a lot of money in their digital wallets, are going to find out that there's really not much there. I mean, they'll still have the crypto. They just won't have much real money if they try to sell it.
When you look at the assets that will do best, so you talked about FANG stocks, crypto, a couple of other assets that you anticipate will do poorly in this environment. What are the assets that you're most excited about, or that you think the average individual likely will end up benefiting if they are positioned correctly?
Well, I mean, these are the assets that I've been buying for a long time, anticipating this. It's not like I just woke up and decided. I've been planning for this for a long, long time. In fact, a lot of people would say, well, see, I'm wrong because I've been saying this for so long. I wasn't wrong. I just knew what was going to happen a long time before it did. But I think the assets that are ultimately going to do well are, one, commodities. I think commodities are going to do extremely well in an inflationary cycle. And that's, all sorts of commodities, industrial metals, agricultural commodities, oil and gas. So I have investments there, and of course, precious metals. They're going to do very well. Gold's the king of all commodities, and I think it's going to do very well in a commodity bull market, especially if we ultimately end up having a dollar crisis, currency crisis, and gold is remonetized in some shape or form, either by the private sector or by various governments. And so there could be a huge increase in the price of gold in this type of environment. But I think that there'll be a lot of money lost in bonds, paper assets. I think that people that own quality real assets will do better. And so that's the value stocks. I mean, companies that actually have big earnings right now, not companies that might earn money in the future, but that earn a lot of money right now and have been earning a lot of money in the past, so that the income is reliable and dependable. And the companies are selling goods and services that people really need to buy, and they'll buy them. I mean, maybe they'll buy a little bit less, but they'll keep buying, and they'll cut back or give up something else in order to buy these things. And so you want to own those businesses. I think the businesses that cater to consumers that don't have a lot of debt and that have more productive jobs are going to be better. because their customers are going to be in a better position to pay. And, so that would exclude, the U.S. I mean, some Americans will be able to pay, but a lot of Americans will be too broke to buy products. I think the emerging markets are going to be, much more fertile ground. I think the consumers there are going to be in better shape. They don't have the kind of debt that you have, let's say, in the United States or some of the, more developed Western economies. You have younger populations. They're still working, educated, skilled, making stuff, and so they can, generate real demand because they can also generate supply to create that demand. And so, I also want to invest in those economies. I think emerging market stocks will be winners, in this environment. I think they'll do better on balance than the developed markets. And I think, overseas markets will do better than domestic markets here in the United States. And I think equities will do better than bonds, but it depends on the equity. I mean, because there are stocks that are going to go bankrupt, and that's, you lose 100% if your company goes bankrupt. But a lot of stocks that won't go bankrupt, investors will decide that maybe they're worth 10 cents on the dollar or 5 cents on the dollar relative to what they thought in a very different investing environment.